What's up, everyone? This is Thomas with Real Broker here in St Augustine, and today I have a very special show for you. I'm going to be interviewing Justin Thompson at Brightway Insurance about everything going on with insurance, everything that you need to know about, everything about buying, selling, or investing here in St. Johns County or northeastern Florida as a whole. And at the very end of the video, we're going to cover what's going on in Florida's crazy insurance market today. So, Justin, how you doing today, man?
Good, man. Thank you for having me.
Of course. No, you know what? I got introduced to you through my transaction coordinator, Caitlin, and she's the best at what she does. And she was like, if you want to use an insurance guy, you need to go to Justin Thompson. and I was like, all right, hey, let's do it. I trust her completely. So I was like, let's do it.
Yeah.
Yeah.
Yeah. Well, yeah, I mean, it was great meeting you. Obviously, the first time today. We've spoken on the phone a few times, via email, of course. But yeah, I mean, as far as what I do in our agency, Brightway, we're the largest independent insurance agency in the state. Mm-hmm. So we represent over 60 different insurance companies. So we always have an available option for a buyer. As far as what we do compared to another captive agency, where other captive agencies don't have the ability to quote multiple companies, we do. So if someone has a home with an old roof or it's located in a certain area that may not be open for insurance with these captive companies, Brightway will have an option for them.
Yeah, and when you say captive companies, could you elaborate a little bit more?
Yeah, so like captive means like a State Farm or an Allstate or Liberty Mutual, Nationwide, where those agencies, when you call them, if you called State Farm for a quote, they would just be able to quote you with State Farm for their auto insurance.
Yeah.
But they don't have like we have, whereas Progressive, Nationwide, Travelers, Safeco, all these other companies that we have access to for auto insurance or even homeowners insurance. So we can kind of shop the market, if you will, for the buyer.
Gotcha. Okay. And maybe you guys can see it or not. I'm not sure how Justin has the camera set up, but you can see on the back wall here, Justin, there's two Justins in the room, just to clarify. We got the videographer here and we have the insurance agent, but Justin has awards on his walls of being one of the best insurance agents in the area here. And also, just from me and Caitlin talking, he makes a lot of people look bad, because you send him an email, he gets back to you within minutes, half the time. And it's like, you got to slow down, because everyone else is trying to catch up to you. Seriously, it's pretty crazy how fast you get back to us. So super thankful for that.
Thank you. I try to make it a point to be fast in that regard and get back and let you know that I am working on it. Mm-hmm. Oftentimes it does take a little while to get a quote if a certain property is a little bit more detailed as far as the age and inspections and stuff like that. But I always try to find a way to get quotes out same day for somebody, because I think that's important, especially if they're planning on making an offer on a property.
100%. And a lot of insurance agents won't even do that without a contract. And it's like, dude, come on, I want to get them a ballpark idea here. And you're just helping us out tremendously. So I appreciate you for that.
Of course, my pleasure.
So, Justin, tell us a little bit about yourself.
So I started here at Brightway at the end of 2011. Prior to that, I was an Allstate agent. But I started here at 2011, kind of building my network of referral sources over the years, mortgage brokers, realtors, and just kind of my sphere of influence in Northeast Florida, living here most of my life. And through the last decade or so, just as you mentioned, I've kind of created a name for myself within the insurance space as far as being that go-to insurance guy. And it's not because I send over a cheap quote or send the lowest cost option, but it's because I essentially advise the buyer what's always going to be in their best interest. And that could be if somebody has a quote from State Farm, but that overall policy offers better coverage, and I know that that's a solid company, I'm going to recommend them. Even though I'd love to be their agent, I'm always going to do right by them. So now I'm essentially an agency partner here at the Brightway Insurance office of San Marco, which is the Carlucci agency. So I plan on being here basically until I retire. The Carlucci family is like family to me personally. So, but yeah, I've been here 12 years now, 13 years, and I don't plan on leaving. So
very cool. Yeah, and your partner Matthew Carlucci, also a big name in the insurance agency here.
Yeah. Mm-hmm.
His grandfather, his dad has a boat ramp named after him, something like that.
Mm-hmm.
And he was just interviewed, which we'll cover here for one of the news stories that I want to talk to you about. But he was just interviewed for it. So kind of a happy circumstance that this happened the way it did. And that news story came out like yesterday. So it's pretty crazy. So for most people, right, they're looking to buy a home. For a lot of people watching my YouTube, they're relocating to this area, right? Mm-hmm. So when they're buying a home, what do they really need to know regarding insurance?
So It's all based on the age of the home. So if you're buying a new construction home, on the insurance aspect, no inspections are required because the state of Florida implemented a building code in 2002 that stated all homes built after that age have to be built a certain way to withstand certain wind forces. So a wind mitigation inspection wouldn't be needed. Obviously, the normal process with you that you'd want to get a home inspection, and as buyers need to know that that inspection is created by the realtor, set up with a home inspector to come out to verify the home's condition. So it could be small or large items that that home inspection entails, but I wouldn't need that on a new construction home. For homes built prior to 2002, typically in this current market, we'd want a 4-point inspection, which goes over the 4 main components of the home that most insurance companies want to know about that have been updated. So roof, electrical systems, plumbing, hot water heater, and HVAC unit, to make sure all those are updated in good working order. And then prior to 2002, you'd want a wind mitigation inspection because you're going to get discounts on the homeowner policy for that. And what the rates are right now, that's obviously going to help the rate go down.
Gotcha. So above 2002, that wind mitigation is essentially assumed.
Correct, yeah.
But you should still get the 4-point inspection for your insurance needs.
Yeah, if it's 2002, because Citizens requires a 4-point if the home is over 20 years of age. Since we're in 2023 now, that 2002 year would need a 4-point if we had to go Citizens route. But it's also good to have that just kind of in your back pocket in case something did happen with the insurance company we went with and we had to go with Citizens. So it's already done. And most home inspectors include the 4-point typically in their total cost of the inspection anyway.
Yeah, and then typically it's like maybe $150, but that's going to save you over the life of you having insurance on the house.
Exactly, yeah.
Yeah, and one of the things that we run into, especially with homes, and this has nothing to do with the age of the overall home, but the age of the roof, right? So everyone knows, hey, we got 30-year shingles, you got 50-year, you got 75-year shingles, right? But in Florida, that doesn't really matter.
Yeah, so like the problem is I always hear these people say, well, I put on a 30-year shingle 25 years ago. And it's like, well, that doesn't necessarily mean that in 25 years when you go to sell that home and it has that 25-year-old roof on it, that you can get insurance, that any buyer's able to get insurance. And the reason for that is because the average life expectancy of a standard comp shingle roof or a standard composition shingled roof, which are those flat tile looking shingles, it's about 10 to 12 years. And you start to see them lifting, curling, and I've even seen some that are a few years old that have that. An architectural shingled roof, which is that layered roof, helps the roof withstand higher wind force, hail, and all that. That's usually, once it starts getting to 17 years old, it starts to wear and tear. But because of the current litigation against insurance companies for these bad contractors and roofers that over the last 6 years since 2017, they've become door knockers and soliciting the homeowner to get a new roof, saying we can put a new roof on your home, all you got to pay is your deductible, or we'll cover your deductible for you. Your insurance company will cover it. So a lot of companies right now basically have a target on their back with those older roofs. So like if they assume that home with the older roof, so now they're putting these guidelines in saying roof can't be over 5 years of age or over 7 years of age or over 10 years of age, whereas 5 years ago 20 years of age on a roof most companies would allow if it was architectural shingle.
Yeah. So what I've been seeing a lot is pretty much like 15 years. Like they pretty much cut it in half. So is that just them being conservative because of what's going on with our insurance industry right now and also fraudulent claims?
Yeah, it's actually both of those. And then on top of that, insurance companies, like most of the domestic Florida-based companies, have reinsurance, and I can go over that with you shortly, but the reinsurers that provide that reinsurance to the domestic Florida companies, they cannot basically take on those older roofs, so they require these insurance companies to say, hey, we need you to put a limitation on the roof age, otherwise you can't purchase reinsurance through us. So it's kind of a mixture of all those things together, and then just with the insurance companies' rates the way that they're going, insurance companies don't want to be on the hook for a $30,000 roof, just because this contractor is, going after them, and trying to take them to court. So they'd rather just not insure a home at all with an older roof.
Gotcha. Okay, so they're kind of pushing it off. They're like, hey, Citizens will take it. That's kind of the way they'll do it.
Yeah.
So speaking of requirements, one of the questions that we get a lot, because pretty much the entire state of Florida is in a flood zone, right, is if flood insurance is required.
So most of the time, we could run a flood zone determination, and the example that I've always given buyers is there's really no rhyme or reason how FEMA determines someone's in a flood zone. It's almost like they hand a 2-year-old a box of crowns in the state of Florida map and say, okay, buddy, draw us the flood maps, and they just scribble everywhere. Because you can have a home that's on the ocean in Jacksonville Beach, highest risk area possible. They're not in a flood zone, but you'll have someone maybe off of Kernan or off of, just think it's in like near World Golf Village, and they're in a flood zone. It doesn't make sense. So what I tell people is we can run a flood zone determination if you're in a higher risk flood zone, which it'll pull in. Obviously, a mortgage company will require you to carry that. We can quote FEMA, which is the National Flood Insurance Program, and there's a couple private flood insurance we can quote as well. That's who my flood insurance is with. The rates are usually lower, but what I always advise people is, in my opinion, the entire state of Florida is in a flood zone. If you think about it risk-wise, Florida sticks out in the Atlantic like a sore thumb. We're surrounded by water on 3 sides. We sit below sea level naturally, and then we sit on water as a state. That's where the aquifer is beneath us. That's where Zephyrhills water comes from. So, if you're thinking about it that way, and flash flooding can occur at any time. Flood insurance is highly recommended. And to put that number in perspective, more than 97 or 96% of people that saw flooding from Hurricane Harvey in Houston, Irma here, Matthew, and even more recently Ian and Nicole, last year weren't in a flood zone deemed by FEMA. So, and they experienced flooding. So usually a flood insurance policy, depending on where you're located, could be anywhere from $500, $700 a year. Private flood market might be a little bit more expensive, but the one thing that I want to advise of is effective October 2021, FEMA implemented something that's called their Flood 2.0 rating. So years ago, if someone was in a flood zone, they would require an elevation certificate, right, in order to get a flood rate. And the rate would be dictated on the elevations of that certificate. So without that certificate, rate may be $3,000. With that certificate in years past, it may drop it down to $1,200. Well, what FEMA realized is we've been undercharging for risk, based on location. So like I was giving you that example of a home in Jack's Beach on the ocean. If they weren't in a flood zone in years past, the max they would pay for insurance, for flood insurance, is like $572 a year. But let's say someone who lives in Orlando in the middle of the woods, they're next to Disney World. If they're not in a flood zone, they're paying $572 a year. So why would somebody who's on the ocean pay the same as someone? Yeah. So they basically now do it on a single risk modeling system, and an elevation certificate may or may not help. It might help a little bit, but typically homes that are in lower lying areas near the coast, near the ocean, the river, are going to pay substantially more than someone who's not. So even with it, even if someone's in a flood zone, the elevation certificate can help, but it's not going to help a huge amount anymore.
So you're essentially saying if you're not in a flood zone and the price is right, you should just get flood insurance.
Because in the grand scheme of things, if you look at it this way, if even you have flash flooding, a $30,000 claim, $20,000 claim on the low end from a flash flooding event, paying $600 a year, that's going to seem like pennies, when you're staring at a $20,000 bill and you're having to take out a home equity line or drain your savings to pay for.
And I think that's even with the new home I just bought, who you helped me out with. The flood insurance for my house is like $450 for a year. Where it's like, why not? At that point, because it's like, it's $450. Yeah, I mean, of course, it's more money, right? Yeah. But for that little bit of money to be protected in the event of a flood, it's kind of worth it.
Yeah, it's kind of a no-brainer if it's within your budget to do so, for sure.
Yeah. So we're talking about insurance and all those crazy things, and premiums have been rising. Can you kind of give why? What's going on?
Yeah, so it's kind of a mix of multiple different things. So the first is obviously insurance companies' loss ratios. So that's like the amount of claims that they've had over the years. Obviously the roofs having to pay out all these claims, litigation costs, things like that. And then, it's just the cost of rising reinsurance as well. So to explain what reinsurance is in layman's terms is let's say the company that I insured you with, I won't name them, but let's just say they have $30 million in their own personal bank. If you had a fire to your house that was $20,000 in damage, they would pay your $20,000 fire damage claim from the $30 million that they have in the bank. But if Hurricane Justin came through and wiped away damaged most of Northeast Florida, or half of Florida, if they had to pay all those claims from their $30 million in the bank, they would go bankrupt or almost bankrupt, as would most insurance companies in Florida. So what they do is they purchase reinsurance with like Lloyd's of London or Swiss Re, and those policies can be several millions of dollars a year, significantly higher, and then the deductible associated with that. So in the event a catastrophic hurricane comes through and it's $150 million in losses, they're going to pay a $10 or $20 million deductible to the reinsurer. Then the reinsurer comes in and pays all the claims. Those costs have gone up, the reinsurance costs, because that's a worldwide thing. So fires in California, things that happen in Australia and Europe, all those things affect the reinsurance costs, and that trickles down to the insurance companies, which trickles down to the policyholder. The example that I've given people is, my first home that I bought in 2013, I paid like $572 a year for my homeowner's insurance. When I sold that same home in 2019, that was like $1,600 a year for that same policy. So we can't expect to live in a state that's been riddled by hurricanes, contracting fraud, flood damage, kind of the whole gamut of weather issues, if you will, and expect our insurance rates to be affordable for the time being. There was recent legislation that was passed in December by the governor that's going to help, I think, with insurance companies' rates, but we probably won't see that until the latter part of next year, middle to late next year. The effects that has, on the positive side towards the insurance companies. I think we will see some relief on the rate side and other companies coming back into the market.
So there's almost like there's insurance for the insurance companies.
Exactly.
Essentially is what the reinsurance is.
Yep.
And because of what's happened here nationally, internationally, and the state of Florida, that bank of money reserves that's for the insurance claims is getting essentially wiped out.
Yeah.
Right? And we've just had so many things back to back to back where, of course, no one could predict that. But like you said, we live in Florida, covered by water on three sides. Things are going to happen, right?
Yep.
So it doesn't sound too positive for
no, it's been
market.
it's been very bleak, I would say, the last 3 years. I mean, there's been 10 plus insurance companies that have gone bankrupt or pulled out of Florida. Most recently, 2 companies I can speak of because they're no longer in business, but Southern Fidelity Capital Preferred, my agency was the largest agency of policies with that company, both of those companies, because their kind of niche was older homes. Obviously, where my office, where it's located, they didn't require any inspections, things like that. They had very good water damage verbiage. They get full water coverage. They were a great company, but they also insured in Louisiana. And in 2019, you remember the 6 hurricanes that affected Louisiana?
Yeah.
And basically in 2020, COVID affected them in a big way because they had a lot of money in hedge funds, things like that. And, they were teetering on going under then, and then effective last July, they gave less than 30 days for 110,000 policyholders in the state of Florida to find new coverage. So, it is a bleak outlook, if you will, but I think there is some light at the end of the tunnel, like I said, with some insurance companies coming back into the market, towards, I'd say, middle to late next year.
Well, so you said something interesting there. So it's based off of obviously what's been going on with the weather in terms of hurricanes, different states, our state, but also economics as well.
Yeah.
Right? Like what happened with COVID, what happened with the markets, all that kind of stuff, and that we're just kind of all feeling the effects right now. Is that kind of what's going on?
Yeah, and I mean the companies that were affected and that went out of business last year, I think, or even the year before, I think were affected by the aftermath of what COVID caused in the marketplace because they had a lot of money tied up in different areas, and they weren't able to find the capital to buy reinsurance, which is obviously, when I was mentioning, reinsurance costs have gone up, and if an insurance company can't purchase and find the capital to purchase reinsurance, that's kind of their kiss of death from the Office of Insurance Regulation, because they lose their financial stability and then they go under. So like a company last year, Prepared, which was Lighthouse, they were based out of Texas. They also had a company in Louisiana, and when one of their subsidiary companies goes into insolvency, all of their subsidiary companies goes into insolvency. So the same thing happened with Southern Fidelity and Capital Preferred because they have policies in Louisiana. So it's like, it's a trickle effect to the subsidiary companies that they own and have.
Gotcha. Yeah, and it's not like Florida's alone. Insurance companies are pulling out of California, pulling out of Florida.
Yeah.
I'm sure other spots as well that we're not hearing about, but it's happening everywhere.
Yeah, and I think what you're seeing in California, because that made national news, and with Matt's dad here in the office being a State Farm agent, we're very familiar with State Farm. They actually pulled out, I think, writing homeowners insurance because of the fire and the risk of it, and same with Allstate, but I think they're still writing auto insurance, but they're just not writing any new property insurance. And most recently, Nationwide, a company we represent, sent out an email to agents saying that for the rest of 2023, they're no longer writing any property insurance, any homeowners insurance, auto insurance, boat in the entire country, not just Florida.
Wow.
And that's to better sustain themselves moving forward for 2024. So you think it's nationwide, and they're a wonderful company, but if you think about it on the larger scale, it's not just Florida that's being affected by this insurance. I think it's a countrywide issue.
Yeah.
And there's something definitely going on with rates, and people moving from Nevada and Arizona are saying, wow, the rates here are almost identical that I'm paying there.
Yeah.
So,
So you could say that this problem is nationwide,
Yeah.
if you will. No pun intended.
Yeah, but I think Florida is kind of at the helm of the issues, and I'm actually surprised that Florida hasn't made national news like you just saw that, California saying, it's a Wall Street Journal, all this stuff State Farm's pulling out, but why isn't Florida's kind of at the helm of this? Because I think the problem here is far superior in what we're seeing than, other states.
For sure. And one of the things you covered, Matthew Carlucci is your partner here, and he also got interviewed for one of the instances, one of these news stories I want to talk to you about. And it has to deal with older historic homes in St. Augustine. St. Augustine's oldest town in the United States. There's going to be some old houses there. And a lot of them, when they built St. Augustine, they didn't think about stormwater management. And they didn't think about, flood retention walls, all that kind of stuff. So they do have some problems with flooding pretty much when it rains for an hour, right? Mm-hmm. So a news story in St. Augustine just came out that a woman's homeowner's insurance policy went up 300% from $8,800 a year to $36,000 a year. And your partner here was interviewed about that. So I'm here and I want to see what's your thoughts on that?
So essentially what happened with Slide is they assumed a lot of policies from a company called UPC, which stood for United Property and Casualty. And they had been in business since 99. They insured in Pennsylvania, I think New York. They were a publicly traded company, but they were going insolvent, and they put a notice out to agencies last year that they were going to slowly kind of get out of Florida in general. And then all of a sudden, most recently in March of this year, they basically...
Can I pause you real quick just in terms, and could you explain insolvent just for the people out there?
Okay, yeah. So insolvent means they don't have enough money to stay in business, mm-hmm. and they're basically gone bankrupt. So they're basically going, like if you want to use the analogy insolvent, just dispersing, just going into oblivion. Like they're going, like they're leaving everything. There's no policies that exist. They're not going to help with any claims. It's just they're gone.
Okay.
Forever.
Gotcha. Yeah, that's crazy.
Yeah, so sometimes companies will come in and assume policies from another company that's going under. So it's like a takeout in a sense. So Slide assumed a large amount of these UPC policies. But what some of these companies will do that assumed policies that either no longer were going to stay on the books or companies went out of business is they would honor the rate previously given by the other company, at least for that policy term. But what Slide did for whatever reason is they're basically banking on having all these policies transfer over, giving the renewal at an astronomical rate and people just being okay with it. And it's not uncommon in this market to see a 30, 40, 50, even 60% rate increase. That's kind of the norm we've been seeing the last 3 or 4 years. But the one that's 300%, that's bonkers to me. So obviously at that point, she would need to reshop her policy, which I'm sure Matt's going to do. But it's just crazy to think that an insurance company would have the ability to be okay with sending out that policy renewal. So
well, and that's what I can't remember the lady that was interviewed that had her home. Her home had 120 years. It's 120 years old. The roof is original. Yeah. So there's definitely going to be a higher insurance cost there. Yeah. But she said that her neighbors actually, some of them paid the bill. Just paid the bill. Didn't even shop around. So, which is hey, if you got it, I guess, great.
Well, yeah, because like most of the time, people's homeowners insurance is escrowed through their mortgage. So unlike car insurance or auto insurance or boat insurance, where it's debiting from your checking account each month, or you get the bill and you have to pay it. It's kind of out of mind on the homeowner side because it's escrowed. So it's typically the mortgage company will pay it, which they probably did, the neighbors probably did, but then the mortgage company will send a letter to the homeowner saying there's a shortage in the escrow by $36,000 or whatever it is, or $23,000, and then obviously their mortgage is going to go up X amount divided by 12 based on that. So then that is when we get that call saying, hey, my mortgage went up, what happened? Yeah. I'm like, well, you got a renewal from the insurance company with an invoice in it. you think in your mind, hey, my mortgage company's going to pay this. Most people don't even look at that renewal. Obviously, they should, and then ask their agent, what should I do to help lower my rate, or is this the best I can do? And then I can advise them accordingly what I would do or what I would recommend doing. Hey, this is best suited, you need to stay put, or let's change some things around, or let me shop it for you.
Gotcha. And what are some of those things that someone could do? Like if they're trying to lower their rate, what can they do?
So there's several things they can do. If they've had a new roof put on in the past 10 to 15 years and they haven't had a wind mitigation inspection done, or they've gotten a new roof recently, sometimes they forget to update us for whatever reason. And so if they've had a new roof put on, they can get an updated wind mitigation inspection if the home is built prior to 2002, and that'll help lower the rate. If the home is built after 2002 and the roof is newer, a lot of companies now dictate their rates based on the age of the roof. So, one company right now, if your home is 2018, the rate's going to be based on that. If your home's 2004, but it has a 2023 roof, the rate's going to be less than versus if you have a 2020 roof. So, you would update your agent based on the age of your roof or let him know that. The other two things we can do is depending on what your deductible is. So under every homeowner's insurance policy, typically in Florida, you have two deductibles. You have your all other perils deductible, and then you have a separate hurricane deductible. So your all other perils deductible, the industry standard for that is $1,000. So that deductible would cover someone if they had a fire, theft, pipes burst, trees falling, lightning, hail, tornado, anything like that. Anything that's not a hurricane or a flood, and I'll tell you what flooding is in a second or how it's categorized, but they would be subject to that $1,000 deductible, and the insurance company would cover the rest after that. If that deductible is set at $1,000, they can raise that to $2,500 or even $5,000. And when it comes to claims on the homeowner's insurance side, it's not advantageous of someone to file a claim for small things. It's not like your auto insurance where you're driving to and from, there's 100 people on the road, you're more likely to get in an auto accident, something happened, that's why your deductible on the auto insurance is usually $250 or $500. But on the homeowner side, if you have a water heater burst and it's $1,500 in damage, and you have $1,000 deductible, if someone called me to file that claim, I'd say I wouldn't recommend doing that because you're basically filing a claim for $500. It's a very small amount.
Spend the same money getting the hot water heater replaced.
And so, and the insurance company wouldn't even replace the water heater because that's maintenance. They're going to repair the ensuing damage caused from the water heater, but they're not going to replace the water heater. So, obviously, if they have a pipe burst and there's 10,000, 15,000, that's when you want to file a claim. But they can always raise their deductible from $1,000 to $2,500. That'll probably lower the rate a couple $100, maybe $300, $400, $500 depending on the company, and they can even raise it to $5,000 if they have the extra available funds and savings to pay for any damage beneath that, and that'll lower it a couple $100. The other thing that they can do is lower their contents coverage, or a personal property coverage under their policy. So under a normal homeowner policy, your personal property coverage is set at 50% of what your home is insured for. So if we're insuring someone's home for $400,000, their personal property coverage in that example would be set at $200,000. Now, most people would say, I don't have $200,000 worth of stuff. If that's the case, then you would lower that down to 25% of what the home is insured for. And that'll lower the rate probably by several $100s a year. And then the last thing, I don't always recommend doing, but if someone is just trying to budget the most affordable thing possible for them, is they can remove replacement cost on their contents. So if you had a fire under a normal homeowner policy and all your stuff in your house is burned, let's say you have a Pottery Barn couch that was $3,000, you have a flat screen TV that's $1,500, the insurance company with personal property replacement cost is going to replace all that at what you bought it. They're going to say, okay, Thomas, go to Pottery Barn, buy something of like-minded quality or the same model, we're going to replace it for you. Or that same TV, go to Best Buy, get a 65-inch Samsung, we're going to replace it for you. But without personal property replacement costs, it's basically covered at actual cash value. So essentially what you could sell something at Craigslist for, Goodwill for, so they would say, okay, like Pottery Barn couch you bought 3 years ago, I know it was $3,000, but there's some stains on it, your dog scratched into it, we're going to give you $700 for it. And they're going to itemize everything that way based on an actual cash value payout versus replacement cost. So doing that can also lower it down, several $100s. So doing those three things, if someone's in a bind to try to get their rate down, doing those three things may lower it up to $1,000 if possible, depending on the company. So that's something they could for sure do.
Gotcha. And, we talked about this before, but you said there's a light at the end of the tunnel. We've talked about this negative stuff, right?
Yeah.
And we've talked about regulations. Can you just go over a couple of those regulations that, making that light a little bit brighter? You
Yeah.
know, so we're not gloom and doom on everything here,
Yeah,
we're
so
being realistic, being transparent. That's what we want to do.
yeah, so the governor signed legislation. He originally signed some legislation back in May or July of last year, then signed it again when he got reelected. But one of the things that have gone away is the one-way attorney fees. So in Florida, and there's basically a fee multiplier. So in Florida, when a contractor would go after an insurance company to sue them because of the fee multiplier, the insurance companies were having to go to court, fight all these litigation costs, and they were having to pay triple the cost because of it's a fee multiplier. So then not only they were having to pay for the attorney fees that's suing them and their own attorney fees, they are basically having to pay triple the cost to put on a new roof than what it should be. So if someone actually had a $10,000 roof that was legitimately to be replaced, now it's going to be $30,000 essentially with the way it was. So that's gone away. The way that they've assigned or changed the assignments of benefits form, which was a form that was basically the homeowner would sign to relinquish their rights to do anything in the instance of a claim. So basically the contractor would have you sign a form, and now that he could take that form to the insurance company and collect funds on the behalf of the borrower or the homeowner. He could file a claim. He could do all these things. And when we see that, we used to see someone, like I said, saying $30,000 to replace a $10,000 roof. So the insurance company was like, no, that's not how it works. So the verbiage on that has changed. And then now we're seeing the one thing that we're seeing change is the insurance companies before had 90 days to underwrite a home. Like meaning, so you close today, the insurance company would have basically 3 months to review the application, any inspections, to determine whether or not they want to stay on the risk. Now they have 60. That's, I think, works in a positive way. It kind of stinks for the agents, but I think it works in a positive way because people aren't getting surprised 2.5 months down the road with a repair or a cancellation or things like that. And I think doing that helps alleviate companies from having so many repair requests and stuff like that. And I think by that they're going to see a lesser loss ratio, like meaning claims occur, because they're requesting things to be repaired sooner and they're not having to pay out more. But I think because of the legislation that was passed, insurance companies that have been closed for quite some time or out of Florida may start to come back in the state because now they don't have to deal with that whole fee multiplier, the assignments of benefits form, things like that, whereas the old policies that are still on the books now are. So basically they're not having all these losses and all these things that have negatively impacted the homeowner side the last 7 years affect them. So they're coming in brand new to the market essentially, and now they're all happy with the way the legislation was passed. And so I think you'll see several companies open back up, start to scale back on roof age, I think, like meaning say, hey, we'll now allow a 10-year-old roof or a 15-year-old roof or whatever. So, but I don't think that'll happen at least until the middle to late next year.
Gotcha. Yeah. But so within, let's say, late middle of next year, that's going to bring people back that were in the state before, and also hopefully lower the prices because of competition. Is that kind of what you're saying?
Yeah. I mean, because 10 years ago, it was like the wild, wild west with insurance companies. I mean, as far as rates go, you could quote any home and age of home and all companies. There's like 15 companies that were all in line, $800, $900, $1,500. It wasn't, you have a 1950 home built or a home built in 1950, 10 years ago, that the home's insured for $400,000, the rate might be $1,500 a year with any company. Now, like $3,500 a year for that same home. So I think what we'll see is a lot of companies coming back in, and then it doesn't necessarily mean the company that someone's with is going to decrease their rate substantially. It just means that that person might be able to shop their policy with other companies and switch to a lower rate.
Gotcha. And all these companies that went insolvent or they left the state, they left a lot of people behind, right? Yep. Mm-hmm. And most of those people went to Citizens, right? Can you explain Citizens, what that is?
Yeah, so Citizens was created in 2002 as the optional last resort for homeowners being able to get insurance. So someone that had an older roof, prior claims, a dog bite claim, or if their insurance company went under, they were the option to go to. Now, 10 years ago, if you were looking at the rates, Citizens had the highest rates on the market, like as far as cost goes. But since they are owned by the state of Florida, they cannot increase their rates more than a certain percentage year over year. So whereas everyone else's rates have gone up, Citizens has kind of stayed even keel. So because they were created as the optional last resort, a lot of companies that have either shut down or closed, like I was mentioning prior to us recording, is a lot of companies now are saying we don't even want to take on anyone that's been non-renewed for exposure management, even though it's not anything that they did, any claims. It's just a company either went under or they're canceling them because they're located in a specific area. Some companies are saying we don't even want those people because we don't want to take on that risk. So at that point, Citizens is an option for those people, and Citizens has kind of gotten a bad rep, I'd say, over the last 20 years as being, people, I guess, have a salty taste in their mouth when they hear Citizens because it's the last resort. But to be honest with you, I mean, they're probably one of the most financially sound companies in a sense that they're owned by the state, so they're never going to go out of business. So,
Yeah.
but what we see is a lot of people forget that because of the way Citizens is set up, it's almost set up like a pool. And to give you an analogy is every Citizens policy that's written, let's say you have an empty pool in your backyard, well, that pool's going to overflow eventually. So what Citizens does is they say, okay, company A or company B, you want to come in and take over these policies or buy these policies from us. Now you're scooped up by this company and you're assumed by this company. Citizens will send out a letter to people saying, hey, here's an offer from a private insurer at X amount. Here's the rate of Citizens. If you don't do anything, you're going to be assumed by this company. A lot of people forget that letter. They throw it away. They don't even read it. Then 6 months later, when their policy renews, it's renewed at double the cost with this new insurer. So Citizens is always an option, but they need to read any paperwork that they do get if they get a policy with Citizens. But they are one of the most lenient when it comes to underwriting. They accept everything except polybutylene plumbing and single-strand branch aluminum wiring. So they have the bad electrical panel or older plumbing, galvanized plumbing, an older roof. Like I think they'll take up to a 25 or a 24-year-old roof as long as if it's shingled, as long as it has 5 years life left on it. So they are always an option for somebody.
And do you think that's a problem? So like that so many people are going to this one place?
Yes, in a sense that, and the analogy I think I gave you earlier is our kind of stat is I think somewhere at the beginning of 2022 they had 400,000 policies on the books, which they were by and far the largest insurer in the state at that point. By the end of last year, they had over 1 million policies. So you think about that policy count has nearly tripled in less than 10 months. That's scary. And the reason for that is because a lot of insurers haven't insured in South Florida, Miami, Fort Lauderdale, St. Pete, kind of the Tri-County area where the higher wind risks are. Citizens is the only option for those people. So yes, I think it's a problem, but I think it's a problem that'll be short-lived. I don't think this is a forever thing.
Yeah.
I think this is a temporary thing, and like you said, light at the end of the tunnel. And if someone is with Citizens and it was their option the last couple of years or even this year, just kind of hang tight with them. That's probably where they need to be. And then once insurance companies coming back in the market and maybe underwriting guidelines change, availability of companies will change, and they can reshop it at that point.
Man, I bet if people are watching this, they're like overloaded with information. You're just a wealth of knowledge, you know. I don't want to keep going too much longer, but this is going to be the one question that I think, especially if people are relocating, looking to buy a house or looking to move to another area within Florida. Do we think the insurance issue that we're having now is going to affect the housing market long term?
I don't necessarily think so. I think obviously people get this kind of mindset, and you've probably talked to buyers, and especially on the mortgage side, is people got this false sense of hope, with COVID and the way that the government lowered interest rates where they were. People saw these lower interest rates and think that was just going to be the norm for forever. But obviously the way interest rates are now, you tack that on to where the insurance rates are. Sometimes that can affect a buyer's debt to income ratio, which if somebody doesn't know that, who's watching what that is, it's basically the money coming in or basically their cost of their mortgage would be higher than what it should be with the money that they're bringing in. So the DTI can be affected dramatically by the cost of insurance. So if they're looking at a house at a certain price point and the interest rate is this and their monthly payment is this, but the insurance is over the amount that they're required to have DTI, then that can affect them being able to purchase that house. So I'd always recommend someone, if they're thinking about looking at a house, whether that be me or someone they got in contact with another agent, to be diligent to get a quote prior to you putting an offer in on a house, because so you know what the cost of insurance will be versus signing a contract, putting a deposit down, binder down or whatever, getting inspections, then getting a quote for insurance, and then realizing, holy crap, I can't, this is way higher than I expected it to be.
And as a rebuttal on the other side, as a realtor, what we do, just because the inventory and everything is obviously really low, we're like, hey, lock in the contract first and then get that insurance policy within that inspection period.
Yeah.
So if the insurance policy does come in within that 10, 15 days of your inspection period. You can always get out.
Yeah, I always forget about that.
Yeah, so hey, they're going to watch this. They're going to get both sides of the coin, so that's perfect.
Yeah.
But Justin, you've been amazing. Can you tell the people where to reach out to you at?
Yeah, so my office phone number is 904-399-1000, extension 3. Email is justin.thompson@brightway.com. If I'm not available by phone, you can always leave me a voicemail or send me an email. But email is typically right now, the way the market is the best form to reach me, just because I could be on the phone and it could be a long call or whatever. But I'm always responsive and always happy to answer a question, whether I'm their agent or not.
Beautiful. Awesome, man. Thank you so much.
Yeah, of course.
And guys, for all you watching out there, if you do have any insurance questions, make sure you reach out to Justin. He's my go-to guy. So if he's good enough for me, he's definitely good enough for you. Until next time, guys, if you're looking to buy, sell, or invest here in St. Augustine, make sure you reach out to me. If you need insurance, reach out to Justin. But we'll see you on the next video.